practices. Whilst we cannot offer you a crystal ball, we're delighted to have the Oracle, as it's fondly called, to share his insights with us. I'm delighted to welcome our distinguished keynote speaker, Mr. Besmark, Technologies and Innovation. He's a fellow of the Institute of Chartered Accountants of Nigeria, a certified IFRS expert, and honorary senior member of the Chartered Institute of Bankers of Nigeria. He holds an executive certificate in strategy and innovation from MIT Sloan School of Management and has at various times attended global management and leadership programs at world-class institutions, including Harvard Business School. He's also a member of the Institute of Directors. Ladies and gentlemen, please join me in welcoming Mr. Besmark Ruwani. Your reputation preceded you, Mr. Ruwani. Ben just said he will walk in at the dots of time, and there you are. Thank you very much. Our moderator today is Ms. Chinwe Egwim, Chief Economist, Coronation Merchant Bank. Ms. Egwim is an economist with over 500 published economic notes. She's a highly sought-after thought leader and has spoken at and delivered keynotes on several reputable platforms. A TEDx talk on equipping the female economy has contributed to conversations around uplifting women. Her book, Understanding Economic Jargon, uses a simple approach to break down how economic indicators and investment climate react to economic shocks and upswings. It has ranked a bestseller on Amazon. Ms. Egwin served as Executive Counsel at Wimbys and is Treasurer of the Association of Professional Women Bankers, an arm of the Chartered Institute of Bankers. I would also like to thank our sponsors. Please welcome Ms. Egwin. Thank you, Chiwi. I would like to thank our sponsors, First Bank of Nigeria PLC, of Nigeria Limited, and Sovereign Trust Insurance for their generosity. And in particular, I'd like to thank Programs Committee for putting together this event. We're delighted to have Mr. Ben Lewin-Jones, British Deputy High Commissioner, join us this morning, and it is my pleasure to invite him to make a few remarks before we yield the podium to Mr. Ruwani. Thank you, and enjoy the morning. Breakfast will be served shortly. Thank you.
Well, good morning and thank you. I'm Ben Llewellyn-Jones. I'm the British Deputy High Commissioner based here in Lagos. And it's a great pleasure to be with you at the beginning of 2022. Thank you to Mr. Ocean. Thank you to you, President Bisi. And I think the most important thing that's happened so far this year is Nigeria beating Egypt in AFCON. So we can all celebrate that and look forward to future victories as well. And we hope Mo Salah continues to decline in terms of speed and pace. And that seems to be going well for us all. No, the year has started very well indeed. I think I'd be very interested, we all are, to hear what Bismarck has to say. What I'd say at this stage is, whatever he has to say, I think there'll be ups and downs. Whatever he has to say, the UK remains firmly committed to supporting two-way trade and indeed investment in what's going to be a fascinating year, a year before a very interesting and very important election in Nigeria. And whilst there may be ups, there may be downs, our commitment remains unwavering. And also our interest in trying to grow the diversity of the sectors in which Nigeria and the UK trade and invest. So particularly in this year, we hope to see a number of trade missions looking at the creative sector, sectors, let's be honest, principally away from oil and gas to try and grow the diversity of Nigeria's economy, and also to build on the strengths, the new strengths that we see in the UK and Nigeria, tech being a very, very good example. Next week, we have the Africa Investment Conference. This is online. I will circulate detail if it's not already been circulated. I hope it has, but if not, to membership so that they can join. And that's looking at a number of things across Africa, but four potential investment opportunities here in Lagos, one in Abuja, 3 in Lagos, that we've been particularly trying to promote to British investors, but also Nigerian investors, raising capital as is appropriate. We also have, in April, the UK-Nigeria Ministerial Economic Development Forum. We do this every 6 months with the Minister of Trade, the CBN Governor, often the Minister of Finance, and our own ministers. And it's another opportunity ahead of that to have what we call a business dialogue with British businesses, but also Nigerian businesses, to try and unblock some of the obstacles that make doing trade and investment difficult, but also, frankly, to celebrate some of the successes as well, and to show where those are. And so ahead of that, I'll be consulting with the Chamber to see what we can do to make sure the right issues are raised and the right examples. So ups, downs, many things to come. Fascinated to hear what's coming next, but whatever happens, we'll be here. Thanks very much indeed.
Thank you very much, Ben. Distinguished ladies and gentlemen, I think we've now come to the point where I'll be inviting, the moderator. Sorry, the guest speaker, the guest speaker. In the person of Mr. Bismarck Rewani, the Oracle, as he's called. We're all looking forward to hearing him. It's always a pleasure to hear what he has to say and how he brings economics right to the streets. That's what we want to listen to this morning. So, ladies and gentlemen, please, with a round of applause, let's welcome Mr. Bismarck Rewani.
Thank you. Distinguished ladies and gentlemen, Ben, Wale, Chinwe, honored to be here this morning. And when I had the lift on the ban on Twitter yesterday, I said, now it's about time. So 2022 is going to be totally different from 2021. A lot of people had written off 2022 because it's going to be politics, 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 and no economics. But I think it's wrong, and I will tell you why. So let us start this by discussing, one, what is it that, why are we here? We are here because this is the Nigerian-British Chamber. The objective of this association to promote trade investment between Nigeria and Britain. As you all know, Britain exited the European Union, and this is an opportunity for them to actually revive a lot of the Commonwealth relationships for trade, business, culture. Britain is also at the forefront of returning the Edo bronzes and all of that, so that's good. This UK-Nigeria trade bilateral agreement was signed in 1990, it's almost 30 years ago, and in fact more than that, 31 years ago. If you look at, that's what I was talking about, the bilateral trade. UK's 46th largest trading partner during this period, that's Nigeria, and outward stock of foreign direct investment into Nigeria was about £5.1 billion in 2019. Now, when you look at this slide, tells you that the trade flows between top UK goods exports in the 4 quarters to the end of 2021: refined oil, textile and fabrics, 54.4 in toilet and cleansing preparations, vegetables and fruits, and electric motors. Refined oil being the highest there. Top goods imported from by Nigeria, imported into the UK, was crude oil, refined oil, somewhat, metal, oil and scrap, gas, and aircraft. Now, total UK exports to Nigeria was down 9.5%, understandably, during the COVID and lockdown. Total UK imports also down by as much as 41% as well. So the exports dropped by 9, the imports dropped by 41. Therefore, the terms of trade favored Nigeria over Britain. So that's not so bad. When you look at UK's aid to developing and frontier markets, number 1 was Ethiopia, and guess what? Number 2 is Nigeria, followed by Somalia, Afghanistan, Yemen, and so forth. But it's not unusual to see that most of these countries have strife. Ethiopia with Tigray, Nigeria, you know what's happening here. Somalia, Afghanistan, Yemen. Is this a company we want to keep? I'm not so sure, but anyway. Are there British companies doing business in Nigeria? Yes, of course. We have, of course, British Airways, Virgin Atlantic, Royal Dutch Shell, GSK, PwC, Diageo, Standard Chartered, British American Tobacco, so on. Okay. Now, But this is what's happening in Nigeria's trade flows. If you look at who are major markets, who do we sell our exports to, which is mainly crude. Our exports are crude, gas, cocoa, sesame, and so on. Again, I'm talking about the formal economy, because there's also a lot of, it's very difficult to differentiate between informal trade and smuggling, because it has become part of it. So, India, 30%, Indonesia, 13.8%, China, 12.7%, and Spain. The major markets, again, 2016, look at 2016, look at 2021. 2016, 38% of our exports went to India. Now 30% goes to India. The US was 10.2. The US is not there anymore because the US is not buying crude. So you wonder why it's so difficult to get a visa appointment. Indonesia was not there earlier on. So in 2016 there was France, Spain, US, and India. Now it has changed. It's China, Spain, Indonesia, and India. Then you have to ask yourself what's going to happen when the electric vehicles and those things begin to change. What will project 5 years from now, what's going to happen? 2022 is going to be almost the same as 2021. Even where did we buy our goods from? This becomes interesting. 2016, 20.3% of all our imports were from China. 8% was from the US, 7% was from Belgium, and 4.4% were from the UK. Fast forward 5 years, what has happened? China 25.3, the US 9.4, Belgium 4.7, India 4.2. There are two things happening here. One is that there's a shift from quality. So if you go to the market, okay, I want to buy a compressor. I have one from Turkey, I have one from Europe, and I have one from China. But I cannot guarantee you that in 6 months' time you're not going to come back and say, look, things are so hard, just give me the Chinese one, right? That's what's happening. Two, the currencies of these countries on the left-hand side have weakened relative to the currencies of the countries on the right-hand side. In other words, competitive devaluation, right, on one hand, price reduction are combining to influence Nigeria's traders' preferences. Also, in the last 2 years, because of COVID and so physical trader traffic to Dubai, to Mumbai, and all those places have actually reduced. So we have seen a shift, but it's interesting that 25.3% of the imports came from China. Why? Also because we have all of this road and belt initiative, projects on the rail, projects on the power stations, the things that the Chinese, well, recently the Chinese have become very aggressive in enforcing their loan covenants. So Nigerians are beginning to think very deeply about what happens. So the outlook is that for the Nigerian economy for 2022, and I'll come back to that, is the world is expected to grow by, actually the World Bank lowered its projection yesterday for global growth for Omicron and other disruptions. Also yesterday, the US reported the highest rate of inflation in 41 years at 7%. So, and what is the biggest item in that? The biggest item in that basket, as far as the US consumer is concerned, is the price of petrol. And if the elections of November this year is not going to be a shellacking for the Democrats, they must do something about the price of petrol. And how do you deal with the price of petrol? You have to bring down the price of crude by hook or crook or by geopolitical and economic considerations. So if the price of crude was to drop, who gets affected most? The people in this room. So, but that's the reality. somebody has to deal with that. So, come back to the outlook for stock. Can somebody move the slides? Anyway, so Nigeria economic outlook. Let me spend a minute here, this is not on the slide, to say that there are two possible outcomes for Nigeria in 2022, at least the first half of Nigeria in 2022. One is what we call the legacy consideration, and the other one what we call static disequilibrium. Static disequilibrium means that the vested interest and the status quo remains, and we'll tinker around it. You'll have unions shouting about going on strike because of subsidies. You have all sorts of things, and that makes a reason not to do what you have to do. That is, and then the price of oil stays relatively high. Everybody says, look, don't worry, this is outgoing administration, already from lame duck to dead duck, so don't worry. But we still have 370 days to the next election and about almost 400 and about 10 days to the handing over. Can you survive in that environment for the next 410 days without having a catastrophe? The second school of thought is that, look, better late than never, let's do it now. Certain things point to the fact that I get a sense, and I'm not a, whatever calls me the oracle, I'm not a soothsayer, but I get a sense that we are more likely to see the legacy approach and the reform-oriented move take sway. All right, so why? Because the same people who are in the static disequilibrium camp are the same people that are interested in politics. And therefore, strategically, they will be distracted. They will not be focused, or they would like to blame everything on reform. But, okay, let's go back. Last week of 2021, and there was correspondence between the president and policy advisors that, look, I want to take stock, and I want to know exactly what the true economic position is. And we need that now. So why now? The answer was, if not now, when? So why us? If not you, who? So then the first week of 2022, the president announced the appointment from the blues of the chief economic advisor. End of the first week of 2022, Twitter ban is lifted, which means that open market communication and all of that. So I'm not sure whether this, because Dr. No says that the first time is happenstance, second time is coincidence, and third time calls for enemy action. So if what happened in the end of December was happenstance, if what happened in the first week of January was coincidence, and what's happening on the second week is calls for enemy action, if I was on the status quo side, I should be very concerned about what's coming. So, with that, we have to, that set the tone. Now, 2021, we had a spillover of the economic sustainability plan, which to a large extent was, one can say, fairly successful in the sense that we came out of a recession but still anemic growth and no impact. 2021 also, we saw the end of the ERGP, Economic Recovery and Growth Plan, which was interrupted by COVID. So if I were to score ERGP on a score of, I used to be a teacher many years ago, so I would say maybe a C minus, right? If I was to score the economic sustainability plan, I would score it C plus, right? Then this year is going to be driven mainly by two things. One, the development plan, and the budget of this year is an offspring of the development plan. And in that, again, I go back. That plan, the committee that worked on that plan, my colleague and good friend Untitled Chapter said, drove that process. And you can see it is a more realistic plan than wishful thinking that was of the past. So I want you to take note of the private-public partnership in policy making that is taking place, and that there are more people who are devoted and believe in economics and not voodoo economics, right? So there are a lot of quacks around the place. So, so all you have to do is put on your television, and you'll be either totally stunned by what you're hearing, or frustrated and just put up your screen and all that. So, because the airwaves have been inundated by all sorts of quacks and voodooists now. But the thing about voodoo is that it can only get you this far before. If the Marabu was that good, he would have taken care of himself before coming to you. So I would say that the days of, at least temporarily, the days of Marabu economics is beginning to ease out. So we would have things, the world in 2022, according to The Economist, COVID-19 will remain a threat to the economies globally, but is it really a threat, or we've just come in? The UK now says you don't have to test before you come in. You are more likely to be infected with Omicron by going to the UK than staying in your home. So come with your Omicron and bring your money. Let's spend it here, and get Oxford Street off the ground again. So, as we go into monetary policy tightening, definitely, as a matter of fact, the U.S. inflation rate of yesterday made it clear that we're going to have at least 3 rate hikes. And something is going to happen to the price of oil, I can assure you. All right? Work systems, depending on how formal or informal your economy is, coming here through the Lekki Bridge, chock-a-block, everywhere. And these are people that are supposed to be working virtually. Where are they going? Are they going shopping at 9 a.m.? No, they're not. They're going, whatever it is. So we're going to have hybrid work systems, but people are going to be much more productive and costs to be reduced. Standard Chartered, one of the companies there, is reducing its branches by 50% because they're able to achieve the same level of efficiency. Not because they don't, but also there's no traffic to the branches. So we've seen almost a 90% surge in e-payments. We've seen a surge in e-commerce. We've seen a surge in utilization, technology. And we've seen a reduction. My anecdotal proxy for this is that 10 years ago, if you came, or 5 years ago, there's no way you would drive from Ikoyi to Lekki or Lekki back that 2 or 3 bullion vans would not have asked you to leave the way because they're carrying cash to a branch. I can't remember when last a bullion van chased me off the road. I'm more likely to be chased off by when Wale Oshi is going to a party on Saturday with his mobile policemen than So that's right. And even then, when you go to these parties now, the people bring the POS. They don't want to be sprayed anymore. They bring the POS for you to. Anyway, so we're seeing a new world, and this is affecting it. And that's why two firms paid $275 million US as signing bonus or whatever it is for bid money for the 5G. It has to be, something has to be really profitable for you to pay $275 million first. Then you are going to fund the capital expansion with another $1 or $2 billion. So, and of course, you can see what has happened to MTN stock ever since then. And one other company, I don't know what the name is. You know, there's a shift towards electric vehicles, that's true. So the obsolescence of oil is staying at us, and the creeping but imminent irrelevance of OPEC. Artificial intelligence and robots, part of telemedicine, everybody is doing tele-education, so it's quite clear. We talked about e-commerce and digital economy. There are more, even IBTC announced, oh, we have set up our own fintech. Everybody set up a fintech. Yeah. Set up a fintech is one thing, but getting access to those consumers in that demography is another thing. Right. So it's a completely new dimension. So will the global trends affect Nigeria? Yes. The supply shortage is affecting us. We're seeing that. And it's amazing the prices of, you talk about inflation, we'll come back to that in a minute. And all you have to do is to go into a pharmaceuticals shop and ask for the price of what you bought 2 years ago and ask for the price today. No, there's no medication that has not gone up by more than 100%. And these are necessities. There's no restaurant you went, if you just pick up your former receipts and pick your receipts today and look at it. And then you have to ask yourself whether the inflation rate that has come down to, it's coming down, they're announcing one tomorrow, will come down to 14.9. And compare those prices with the price you're seeing. So again, one of the issues which will differentiate 2022 from 2021 is that I suspect that you're going to have more data integrity because you cannot fool anybody anymore. You can announce all you want to announce. You're just playing with mirrors. So, is monetary policy tightening? Yes. So there's going to be an announcement, I think on Saturday, about Nigeria inflation coming down to 14.9 or so. But yesterday you heard the US inflation go up to 7%, Chinese inflation, European inflation. So if you are importing those goods and the prices have gone up and the exchange rate has depreciated, who are these charitable organizations that are selling goods in Nigeria that are bringing down their prices? Or their prices are increased at a slower rate? So that's a question that's going to be interrogated. And if after 2 or 3 times you've heard news that is at best inaccurate, at best managed for political reasons, then people will differentiate very quickly between propaganda and analysis. But now, Twitter has been lifted. Everybody here was tweeting with VPNs anyway, so the only person that was not tweeting was all the inconvenience.